Since I've owned it, it's done better than most of my other investments, so it's grown into a pretty big position. A lot of my position comes from the fact that I haven't sold. Also, because I'm a general partner at Ego Death Capital, we put money into Bitcoin related businesses. Along with Bitcoin, I also have investment exposure that is linked to it in a roundabout way. Lyn Alden is a well-known macro analyst and financial strategist who has done a lot of research on the business world, Bitcoin, and similar topics as a sound money. Lyn is a supporter of both gold and Bitcoin. She has said that Bitcoin is the hardest money there is. Lyn told Altcoin Daily not long ago that she thinks Bitcoin's value will go up until it's worth hundreds of thousands of dollars. When asked if she agrees with Cathie Wood's $1 million prediction by 2013, Lyn says she thinks the price of Bitcoin will reach a very high $1 million in the next few years. Lyn thinks Bitcoin will reach $1 million per coin one day, but she thinks it will happen sooner than the CEO of ARK Invest. Lyn thinks that the current global fiat-based monetary system is doomed and that things will become uncertain and chaotic. Because of this, she thinks that Bitcoin and gold will become more sovereign wealth funds and big hedge funds. Multiblin says that big picture factors like global liquidity have a bigger impact on Bitcoin prices than simple factors like the Fourier herring event. This is because central banks like the US Federal Reserve are easing off on quantitative tightening. Lyn thinks that Bitcoin's value will go through the roof after 2025. Before we show you clips from Lyn's talk, please like this video, subscribe to the channel, and set your alerts to receive more videos like this. Yes, I did find it more than once. To put it simply, it usually takes more than one touch. Someone I knew minded on her gaming machine back when that was easy to do. I thought, that's cool, I might want to do that. I thought maybe I should do that since I had a good graphics card. I never did it. After some time, it had another one of those bull runs. I thought maybe I should buy some of that at the time. I looked at the trade and thought it looked very sketchy. What year? The second one would have happened around 2013 to 2015. I looked at the transactions and thought they looked very sketchy. I need to spend more time on this to avoid being ripped off. I just didn't. I didn't get back to it because I had other things to do. There were a few times I dealt with it during the big bull run in 2017. One was, and I was still an engineer at the time, and my job was to handle technical procurement for an engineering center. All of a sudden, the number of graphics cards doubled. Like, why are graphics cards going up in price by 2 times? Someone in our team said, oh, that's Ethereum. I asked, what is Ethereum? I did all this study. What's going on with Ethereum now? Things are not going well with Bitcoin. In November 2017, I wrote my first piece for the public about the place. It was pretty much just that I thought the technology was cool, but that it was too much at the time. Of course, over the next month, it hit a high point and then went into a long bear market. This time though, I tried not to forget about it. I used to see it, think it was cool, and then forget about it all those times. But since this was the third time I did that, I decided I would not make the same mistake again. I kept an eye on it during the bear market. Then that was especially true during the COVID crash, like the sell-off in March 2023. I put a lot of money into it when it started to come out of that. Since then, I've been optimistic. On the other hand, I keep things pretty simple in my online portfolios, such as I'll give out 5%. During a bull run, when it gets to be in the double digits, I'll adjust it going back down. Because a lot of people only look at that collection. In this case, the standard is a pretty stable portfolio that has been spiced up a bit. For my own share, it's a double-digit number. The amount given is pretty big. One reason is that I bought it because I was sure of it, and the other is that it's done better than most of my other investments since I've had it. So it made sense for it to become a pretty big role. A lot of my position comes from the fact that I haven't sold. Also because I'm a general partner at Ego Death Capital, we put money into Bitcoin-related businesses. That's why I also have venture capital risk that is kind of linked to Bitcoin. Key investors and experts who spoke at a meeting on Wednesday had different thoughts on the Fed's decision to lower interest rates. A lot of people are looking forward to a rate cut, which means they think the stock market and other things are going to go up. I think the Fed is making a huge mistake by cutting rates at a time when the US government is printing and spending as much money as they ever have in peacetime. To make things worse, Former Bitwise CEO Arthur Hayes said that the Fed was wrong to think about lowering interest rates even though the government was spending too much and making more dollars. I think the markets will fall apart a few days after the Fed cuts rates. Lyn agrees that the central bank's move, even though it was expected by many, is not the best thing for the US economy right now. Lyn says that the shift and generally dovish comments made by Fed officials on Wednesday put the whole global financial system at risk from the coming fiscal dominance train. That's why she thinks the US government should look into an austerity program to help slow it down. Let us get back to the conversation. She also talks about the stock market and says that the top indices are held by just a few companies. This shows that the economy is not strong and stable at all. That's why I didn't stress it as much as other people did. I mean, it's clear that the halves are important over time because they bring new supply to the market. As that goes down, that is important. But I think that world liquidity has a bigger effect. I've looked into it. In fact, I'm putting out a report with a coworker. We also looked at liquidity relationships, comparing Bitcoin to global liquidity and then other assets to global liquidity. It turns out that over a rolling 12-month time, Bitcoin is more closely linked to global liquidity than any of our other major assets. So stocks, bonds, gold, foreign stocks, and other similar things aren't all tied to liquidity. However, many of them are, especially stocks. Bitcoin, on the other hand, is most closely linked to cash. The majority of those highs and lows are linked to changes in liquidity. And how I measure liquidity, one of the two main parts is the rate at which new credit is created around the world. Two more things to think about are how strong the dollar is compared to other currencies. This is important because many countries around the world have bills that are mostly made up of dollars. For the most part, that's how foreign money is kept track of. So when the dollar gets stronger, it actually makes it harder for people around the world to get cash. The opposite is true when the dollar falls against other big currencies. This is actually good for liquidity. So I think that a lot of the relationships that people think are related to the 4-year cycle are actually liquidity, which kind of overlaps with it. However, I do think that the halving is also relevant in some ways. You also think that world liquidity will rise next year. In what place does that put Bitcoin? I would expect higher as a starting point. I'd say in the next 18 months, but it's hard to say for sure. Most of the time, when the Fed starts to be strict, the dollar gets weaker. It's not going to be a straight line. However, some of the things that really kept the dollar strong are starting to fade. And as for the dollar, you should know that the US has a chronic trade deficit, which is bad for most currencies because it makes them less valuable over time. However, the US dollar is also used as a reserve coin around the world. There are a lot of dollar demand loans all over the world, which means that people will always want dollars. So there's this point of balance. When we make monetary policy stricter, we can actually make the dollar stronger. When we loosen monetary policy, the dollar starts to go down. I think the dollar will be a little weaker and that there will be more global credit creation by next year or the year after that. This means that I think we're beginning another upward liquidity cycle after being range bound for more than 2 years. This funding cycle has been pretty close to what Bitcoin has done. If you ask me,